It takes luck, but more importantly, knowledge and precision to invest in the correct cryptocurrency at the appropriate time. Unfortunately, the only people that constantly destroy the crowds are those who improve their investment strategies every day, one error after another. This is financial and investment wisdom, and I'd want to welcome you back to the channel. Please subscribe to the channel and turn on notifications to be notified of every new upload before we begin reviewing the 10 worst cryptocurrency investing mistakes you should avoid. The coronavirus causes a lot of financial stress, and now that vaccines have been developed, many are optimistic for this year, hoping to make up for what they lost last year. Things will gradually return to normal, but despite the extensive damage, one industry has defied the trend and is expected to rise faster. You guessed it correctly. It's the cryptocurrency industry, which is dominated by Bitcoins. Last year, billionaire investor and Tudor Investment Corp founder Paul Tudor Jones claimed that Bitcoin, the contentious digital currency, reminds him of gold in the 1970s and may be the best hedge against inflation in the age of the coronavirus. "If I am forced to forecast, my bet is it will be Bitcoin," he said in a market outlook statement titled "The Great Monetary Inflation." So, if you have money and want to try a high-yielding but high-risk investment, Bitcoin is where you should put your money. But before you rush in, keep in mind that it is a highly volatile digital asset with equal prospects of making a fortune or going bankrupt. The first thing you should avoid is investing without knowing what you're doing. Investing in cryptocurrency or any other asset without first understanding the details is the worst blunder one can make. You must understand what you're getting into before investing even a single dime. In addition, it would be best if you learned how it works to react appropriately to any unpleasant event. Before you invest, there are a few things you should know about cryptocurrency. It's not a metallic coin or paper money, even though it can be used to make purchases. It is entirely digital and only exists in the digital realm or on computers. It can be used in a variety of nations and across international borders. It is simple to exchange with other users without having to exchange it for local cash. You must maintain track of your own crypto money, because no central banks or financial organizations are involved. You can use it without revealing your identity. All transactions are logged, but unless you tell them, no one will know your account number. It's secured. Cryptocurrencies have progressed to the point they are now utilized for investing and payment. Bitcoins are the most popular cryptocurrency, with between 2.9 and 5.8 million users utilizing cryptocurrency wallets in 2017, with Bitcoin being the most popular. Bitcoin has become a new trend in recent years, and many people are interested in investing in it because of its benefits. But before you invest, you should learn everything there is to know about it, like what it is, how it operates, and how to obtain it. Another mistake is that you don't know how to read a fundamental trading chart. Once you've grasped some fundamental concepts like supply and demand, you may begin learning how to read trade charts, commonly known as technical analysis, and, more crucially, tie the project's fundamentals to these charts. By evaluating past data, technical analysis backed by sound fundamentals, and financials of the project may help you better anticipate the future. For example, you'll get a sense of when markets are poised to turn or if assets are misplaced. The following is when you think about encryption, you probably think of safety. Yes, you read that right. Cryptocurrencies are encrypted to keep them private, but this does not prevent them from being hacked or stolen. Because these assets are decentralized, you only have to keep them safe. Here's some suggestions to safeguard your investment. Codes or keys are used to represent cryptocurrencies. It's similar to the one-time password, OTP, that you're not supposed to share with anyone. Crypto exchanges have security measures, but don't leave your crypto coins on exchanges for long periods, as you may become a favorite target for many hackers. Choose a digital wallet from a company you can trust to store your crypto coins. Before deciding on a cryptocurrency wallet provider, look at the company's features, credibility, performance, and reputation. It could also be a lack of knowledge about market dynamics. Bitcoin only accounts for around half of the market's liquidity. Thousands of altcoins exist, and they all work in tandem with Bitcoin. Poor and costly investment decisions might result from a lack of knowledge of these relationships. Those who make a living trading cryptocurrency are intimately familiar with these dynamics. Hello there, mate. I hope you're enjoying this video. If so, please give it a thumbs up and let me know what you think in the comments box below. If you don't pay attention to the math, you'll make a mistake. It's all about profit potential when it comes to investing. Because it is predicted that Bitcoins will rise in value in 2021, you must keep your eyes on the prize. And how do you go about doing that? If you pay attention to the numbers, you'll be able to see if you're earning a profit or not. It would be best if you looked into transaction fees. Furthermore, because cryptocurrencies are extremely volatile, many price adjustments will be in a day or even an hour. Therefore, if you want to take advantage of these improvements, you'll need to look into transaction fees. Being the victim of a con. There are several scams to be careful of. Let us go over each one by one. cloud multiplier scams. Fraudsters occasionally contact victims via email or text with an investment opportunity. They claim to return double or triple the amount invested in Bitcoin to investors who deposit their cryptocurrency to a specific digital wallet. Keep in mind that free money offers should always be treated with caution. Spoofing. Criminals may quickly inflate or deflate the price of relatively small or unknown cryptocurrencies by issuing fictitious purchases or sell orders, which can send the currency's value rising by hundreds of % at a time. When unknowing traders rush in to try to get a piece of the action, the criminals cancel orders that they never intended to fulfill in the first place, causing the price to fall in some cases. Criminals may own a large amount of a cryptocurrency at any given time through pre-mining much of it before it is available to the general public. Then they can inflate the price by advertising it on social media and selling it at a higher price on crypto exchanges. After then, they vanish. Malicious wallet software. According to the best crypto advice, stick with large brands in crypto wallets like Ledger, Trezor, Exodus, or MetaMask. Dodgy or unknown wallets on the Google Play Store or the App Store can use dodgy programming to steal your crypto assets. Fake coins. It's impossible to distinguish what's real and what's not with so many cryptocurrencies on the market. Criminals can steal your identity and, in certain cases, your hard-earned money if you buy in bogus coins. They accomplish this by phishing, which is when they persuade you to click on links in emails that download spyware onto your computer. So take no one's word for it and conduct your own study using as many sources as possible. Stop relying on emotions to make investment decisions. You'll hear acronyms like HOLD, FOMO, and FUD a lot regarding crypto investing. These acronyms indicate some plans, but they are also emotional. It would be best if you allowed your emotions to guide your investment choices. For example, HOLD stands for hang on to your investment, regardless of market volatility. However, you may find that you don't have the luxury of waiting for a good return on your investment. This is the point at which you must stop losing money. Fear of missing out, or FOMO, refers to buying into the hype to keep up with the crowd. This is the riskiest since you are more prone to fall victim to fly-by-night schemes or scams. Fear, uncertainty, and doubt, FUD, are acronyms for fear, uncertainty, and doubt. Even if the study figures or market emotions are in your favor and tell you to invest, FUD may prohibit you from investing in crypto. If you don't have a hardware wallet, don't start with crypto. We'll be honest, hardware wallets are a good investment if you've invested more than $500 in cryptocurrency. Because they are not connected to the internet, hackers can only access your funds if they take your physical device and have the password to access it. This makes security much more manageable. Next, stay away from investing in a single cryptocurrency. Bitcoins may increase value by multiples, but you never know when the market will flip around. As a result, it's a good idea to invest in multiple cryptocurrencies as some may provide good returns, such as Ethereum and altcoin. Don't put all your eggs in one basket, as the saying goes in investing. Stick to it and don't invest all of your money into one cryptocurrency. That concludes today's video. Please subscribe and switch on notifications to be notified of each new upload. This is Financial and Investment Wisdom. We'll see you on our next video.